Hi everybody, welcome back to the channel, and today we're talking about master limited partnerships, and we're also talking about a specific ETF in this video and how you can actually make money from master limited partner ETFs. And first of all, these are basically partnerships that are publicly traded. So that's the simplest way you can think about this, is that we're investing in partnerships that are publicly traded and allow you the liquidity like you would get in the stock market. And so these are some of the advantages, right? Because unlike a traditional private partnership, you're not going to have the same liquidity as you would if it was publicly traded. So we're specifically focused in terms of what businesses we're investing in with these master limited partnerships. Energy. So think energy companies, and think about what we're investing in, right? We're trying to invest in natural resource companies, companies that are maybe oil and gas related, energy related, and we basically want to try to collect income from these businesses and distribute it to shareholders. And so as you invest in these master limited partnerships, if you buy them through your broker, let's say you have Fidelity or Schwab, whatever your broker is, or whatever financial advisor you're working with decides to buy this for your account. If you decide to invest in something like this, just understand what you're investing in, right? You're investing in energy companies. You're investing in companies that are, as it says right here, according to the AI overview on Google, MLPs primarily invest in businesses involved in the exploration, development, mining, processing, or transportation of natural resources such as oil, gas, coal, and timber. So those are some examples. And so they're known for their consistent cash flow distributions. As we were just talking about, we want to think about how we can get distributions on a regular basis from these. And when we think about the term dividends versus distributions, it does mention that as well. So these distributions are generally seen as a return of capital and are subject to tax when the investor sells their units. So one thing to keep in mind with these are specific tax ramifications. Now, there are certain potential tax benefits. So if you look at this, tax advantages, right? MLPs are generally considered pass-through entities. So they don't pay tax at the corporate level, but instead the income, losses, deductions, and everything are passed through to the investors, who are then basically taxed on their specific share. So if you invest in one of these, you're taxed on your share, but you're not going to pay the corporate tax, which is good. We don't want to pay the corporate tax, right? So if you think about what type of companies, once again, exploration, drilling, production, midstream, gathering, processing, transportation, and storage, and downstream. These are basically the three categories: upstream, midstream, and downstream. So specifically, this ETF we're talking about today, MLPA is the ticker symbol. This one is midstream. So if we look at the actual website for this, midstream exposure to the MLPA, it offers high income and a low expense ratio relative to competitors. Now, if we look at the expense ratio, I would not say this is the cheapest by any means. I mean, we've seen expense ratios in terms of, if you look at specific ETFs like Vanguard and other types of, maybe utility or energy related ETFs, you can find expense ratios much lower than this. But if you're looking for specific MLP exposure, I think what this is saying is it's lower than the average MLP ETF, right? So we're looking at a 0.45 expense ratio, less than 0.5% on the expense ratio. Net assets under management, $1.81 billion right now. Net asset value, $51.75. If we look at the most recently traded price, if we type in MLPA, for example, we can type in MLPA ETF and find out where it's trading, 51.87. So according to the net asset value, 51.75. So this is trading a little bit above the net asset value according to the website, but that can happen. There can be tracking errors based upon the actual assets under management versus what the ETF is trading at. These ETFs follow creation, redemption mechanisms where the shares are redeemed on a supply and demand basis. And so we are basically going to see these shares and assets under management go up or down based upon demand for investors in these funds. Now, if we look at the last year, performance is 9.41%, 131% over the last 5 years, not bad at all. So if we look at, once again, you can look at the net asset value. You can also look at the shares outstanding. We have 34 million shares, almost 35 million shares outstanding. And then we can also look at what we're actually investing in. So if we look at the top holdings, you can see some of these top energy companies and you can see what they are: Energy Transfer, Enterprise Products, MPLX, PAA, Western Midstream, Sunoco, and all of these combined, right? So these are some of the top holdings you're going to be investing in. And if we look at, for example, the Global X MLP ETF dividends, 7.21%, 3.74 is the most recent annual dividend that we're receiving for this ETF. And if we're looking at the most recent amounts that were being paid out, 90 cents a share, 91 cents a share, 93 cents a share is the most recent amount that we were paid in February 7th, 2025. And if we're trying to figure out how much we could actually make from this, if we were going to, let's say, invest even just $10,000 into something like this, if we take $52 as the share price is about 51 right now, 51.70, let's just say we're going to buy 200 shares of this ETF. How much could we actually make in dividends from 200 shares of this ETF? It could be 0.935, right, times 0.935. Apologize for the background noise. My cat is going absolutely crazy right now. And if we look at what this is actually being paid out, 200 shares times 0.935, $187 in the last month you could have made just from owning 200 shares of this ETF. So that just gives you an idea of what type of dividends you're expecting. The yield right now, once again, is 7.21%. So for every $10,000 you're going to invest, just figure, you can make $700 a year from this ETF, and then divide it by 12 on a monthly amount. But that's what we're looking at on this ETF, guys, is if we look back even over the last several years, you can see that this was trading much lower, 90 cents, 70 cents, 80 cents, but kind of in that range. 70 to 90 cents has been the last few years what we've seen in terms of those dividends and how much we are expected to get paid out there. Looking over the last, let's just say the last several months, this ETF has risen from 45 roughly up to $51, $52 a share. So not bad performance there. As you can see, once again, according to FinViz, trailing 12-month dividend, 7.03%. Looking at roughly a 7% yield, so not bad at all on that. And if we're looking at just the performance over the last 5 years, I did want to point this out, 131% on top of the dividends you're receiving. So on top of the 7% yield that you're getting from an ETF like this. So with that in mind, guys, let me know what you think about an ETF like this. This gives you exposure to MLPs, Master Limited Partnerships. This one in particular, I don't think has a bad track record over the last 5 years. Now, looking longer term, you can see since like 2012, this one is down. But let me know what you guys think about this in the comments down below. Are you invested in this ETF? Are you invested in anything similar? Would you consider Master Limited Partnerships? I'd love to hear your thoughts in the comments down below. Thank you so much for watching. We talk about cash flow, dividends, all kinds of topics on this channel related to the stock market and dividend stocks and things like that. So if you like those topics, consider hitting that subscribe button, and we will see you in the next video. Take care.